Continue with the broader markets. S&P's coming off its worst day since the beginning of August. Dan Greenhaus joins us here at Post 9, Solus Alternative Asset Management Managing Director and Chief Strategist. It's good to see you back, DG. Welcome.
Thank you for having me, sir.
What is your biggest concern at the moment?
I mean, the tariff uncertainty that Sarah just talked about is still. There's a lot of people who think that this is a settled issue, tariffs don't matter, that we're able to digest them. I think my read of the situation is, while that's largely true for now, a host of companies during earnings season talked about the effects of these tariffs unfolding over the next, called 6 to 9 months. And so I don't really have a feel for what the world is going to look like on that front. And I think that's a bit of uncertainty because there is a divergence. As, again, we just discussed, some people think this is a done deal, and other people are obviously the world is falling apart.
Right. Does the labor market concern you?
Well, sure, it's slowing down. Yeah. Expectations for Friday's number is south of 100. I'm probably a touch north of 100, but in either case, it has meaningfully slowed.
North of 100?
Yeah.
Oh, really?
Yeah.
Because I think the street high is Deutsche at 100.
Yeah, I'm a little bit more optimistic. Although I will note, post-COVID, forecasting this number is basically an impossibility.
Yes.
Not that it was a sure thing beforehand. But either way, whether you come at 110 or 75 is not the point. It has meaningfully slowed down. We know the JOLTS report just came out. I have to go through the details, but we know that there have been job losses among Hispanic-oriented industries like leisure and hospitality, and a couple of companies, Wingstop, Ross Stores, a couple of others, have noted a slowdown in that portion of the economy. So there are things going on under the hood that you have to pay attention to. But on balance, the AI story remains intact, and that's really the driving force behind markets.
Job openings fell to 7.2 million in July. So it's more evidence that we're in the cooling direction on the labor market.
And to
Nothing
contextualize that for viewers, 7.2 million is a perfectly normal rate of the number, the 12 million, the 10 million plus that we had was an abnormally high level of job openings. 6-7 million is perfectly in line with what the economy was doing pre-COVID, and is nothing. It sounds like a lot, but it's normal.
But I think the debate that we just heard, the Bostic headlines, in the market and at the Fed right now is which is the bigger worry, what's happening with inflation or what's happening with the job market?
Well, listen, I think if you're the Federal Reserve, you're concerned about the job market. As an investor, you're obviously concerned about both. But really, a lot of this discussion is esoteric and academic in nature in a lot of respects. As an investor, what are the cards being dealt to me? How do I play them? And the esoteric academic arguments sort of take a backseat. But that said, I think, again, if you're the Federal Reserve, you can tolerate 3% inflation. You probably cannot tolerate job losses, or you certainly can't tolerate job losses.
Right. So do you think the most important thing right now is AI investing?
I think so.
Expectation?
Yeah, I think so. I know this is a conversation we have on the network quite a bit. What's more important, the Fed or AI?
Right.
Obviously, both are important. But when you look at the pervasiveness of the AI trade from NVIDIA and Broadcom on down through GE Vernova, I should say, sorry, Vistra, Vertiv, et cetera. The pervasiveness of that theme, the dominance of it from a spending standpoint, is so pervasive throughout markets, I think, and the comparisons to the 90s are apt in the sense that you saw a similar spider webbing out throughout markets in the economy. If something slows down there, that's going to have an immediate dramatic effect on not just the markets, but the economy as a whole.
So what sectors do you like? What stocks?
For Solus, I mean, we've been focused on the consumer and energy as an investing theme. I think there's a little bit of a difficulty to what we do that a lot of other people don't. But for the average person, I think right now, again, there's so much concern about, are we in a bubble, are we not in a bubble? I would just remind people, the first time, the Greenspan irrational exuberance that we all know so well was December of 1996. I have articles in the New York Times, the Washington Post, the Wall Street Journal, talking about a bubble in '94 and excessive valuations coming out of the recession in the early '90s, and that didn't stop anything from doing what it did. And I would also add, the S&P 500 was trading at 19 times earnings at the end of 2019. We are up 100% since then, and people were just absolutely apoplectic about the level of valuations then. So valuation, as we all tell you, day in and day out, is not a market timing tool, and I don't think that today is really any different from that. So that said, what do you favor? Whatever you favored yesterday, you should favor tomorrow until the story changes.
But you do think that this could go on for a while?
The analogy I've been using is the Netscape IPO, and if you compare that to the ChatGPT release pace. We are tracking out through what we'll call mid-1998 or so, and obviously that bull market went on another 2 years. And that's not to say what happened then is automatically what's going to happen now, but it does contextualize what's going on. So do I think it can go on? No one has told me that it's not. There's no slowdown in CapEx spending. There's no slowdown in orders. Demand is still there. The technology is still being utilized throughout corporate America.
And getting better.
And, well, of course, because right now, I mean, it's not the best. So I think there's room for improvement, both from a technological standpoint and also a productivity standpoint, and that still lays in the future.
Yeah. We're definitely going to be having our eyes peeled for use cases coming beginning next year. Dan, it's good to see you again.
Thank you for having me, guys. Thank you.
Dan Greenhaus.